But the one big theme that we're tracking is consumption stocks, which are back in vogue. Potential GST rate cuts, a good monsoon, and front-loading of rate cuts by the Reserve Bank of India seem to have lifted sentiment. Will there be a big switch from, say, capex to consumption? Nimesh has all of the details. He's by the wall to tell us more. Nimesh.
Well, I did this piece on Friday in ERT as well. And the big question that we're asking was, is this a time for a portfolio reset from capex to consumption? That's the big theme or the big debate which is there in the market as well. And we all know that capex had done phenomenally well in the last 4 years, and there are reasons for it. So the big point is that the capex have really outperformed consumption in the last 4 years post-COVID. And the big reason for that was it was backed by government's push. Now, if you just look at the consumption, like the capex basket, this is a 4-year CAGR table which comes up. Every sector in that consumption basket, whether it's a PSU, capital goods, infra, utilities, power, or industrials, all have gained between 24 to 35, 36%. This is the 4-year CAGR return of the capex space. So that's the kind of outperformance we've seen in the capex basket. Now look at the consumption basket. Vis-a-vis to the capex, the consumption basket has relatively underperformed in the last 4 years. The auto index is the only good winner there, up 24%, but the rest of it, the consumer durables, the FMCG and the oil and gas are up between 12 to 15%. So relatively, they have massively underperformed the capex basket in the 4 years, and there were reasons for it. Now, why we are saying, look out for the consumption basket, because there is a big shift in focus from the government as well. The big indication was in the budget itself, when they've cut the income tax. That was the first big indication. Then we saw the front-loading of the rate cuts by the RBI. The monsoon has been good and has been progressing well. And last but not the least, the GST rate cut rationalization, which now looks like a reality. So that's going to be a big boost for consumption stocks and the consumption basket going forward. In fact, Bernstein wrote a note last week, and they anticipate a great switch from capex to consumption, and that's largely because of the few points that are highlighted in the past as well. In fact, they've made some changes as well in the consumption basket. They've done mild overweight on staples, and they continue to be overweight on durables. Now, within that basket, some stocks will come up where they're very bullish on. So within the consumption basket, one of the themes that they're playing on is QSR. The second space is retail, and the third is auto. This is the consumption basket they're very overweight on. On utilities, they've done equal weight, and they've turned underweight on industrial. So there is a big shift happening within the Bernstein portfolio as well, from capex to consumption. So that's the big thesis, and again, we've realized in the past as well, whenever there is a big tailwind, you see massive outperformance on sectors and stocks as well. So that's the theme. Now that the government focuses on consumption, can we see a big shift in portfolio as well from capex to consumption? That was a brief data on why there is a reset likely from capex to consumption.
Okay, all right, Nimesh, thanks very much for that. So capex to consumption, whether or not there will be that shift that will take place. But Hormaz is here with us to tell us about a whole host of capital goods which have surged in the last 4 odd years. Hormaz, give us more data points on this.
But as Nimesh was mentioning, right, if there is a sector tailwind, the returns are always outsized in terms of stocks when it comes to that. And if you take a look at the capex related names, to start off with some of the PSU related names, take a look at Mazagon Dock. And these returns that we are comparing are from December of 2020 to December of 2024. And take a look at Mazagon Dock. The stock is up almost 20x during this period, with gains of almost 2,000%. And that's not all. We take a look at some other names in the defense space. So the BSE Cap Goods top gainer in this during this period is PTC Industries. That stock is up almost 40x. So during this period, so outsized returns that you see on specific stocks. And if you take a look at the railways as well, it was 2023 and 2024 when railways had this dream run, and RVNL of course was part of it. 1600% return on this stock during this 4-year period, and it's still it's almost 12-15x still above its IPO price. So that is RVNL for you, the top gainer on the BSE Infra Index. Now on the BSE Power Index, the top gainer is CG Power, and during this 4-year period, the stock has risen almost 1500%. And another another one that has been an outperformer through and through during this capex cycle. Now, this was some of the state-run names. So take a look at the MNC names as well, with the private capex related theme, that the expectations of private capex looking to pick up. Look at Siemens. On a base like that, a stock going up almost 4x is a 300% return for Siemens over a 4-year period. And even better for ABB India, that's up almost 5x during this period. So another outsized return for a lot of these names, be it in the public consumption space or within the private consumption space. So that was some of the major movers within these space. And of course, there are a lot of others as well, Nimesh.
So, so again, the whole idea was to do a piece on whether there is a when there is a tailwind, you see massive outperformance in individual names as well. What I spoke was only the indices, which are up 25 to 35% on a 4-year CAGR. What you highlighted was the individual stocks, which have gone up 5 times to 20 times in that phase, right? And just to give a other side of the example, Hormaz, if you look at lever in the last 5 years has been flat. It's given 0 returns. We've done that data as well, something like a lever is given 0 returns. So there are now enough ingredients for the consumption stocks to do well. And we highlighted the reasons for it, right? Good monsoon, rate cuts, the income tax cut, and the fact that there's going to be a GST rationalization as well, which is going to be a reality now. So that was the whole idea of putting this piece out, that given the macros, given the shift in stance from the government from capex to consumption, it's high time that we, as an investor, also look at a big shift from capex to consumption.
Okay, so let's see where the Nifty Consumption Index goes. Nimesh, thanks very much for joining in and taking us through that, as well as Hormuz for taking us through all of the statistics in terms of how the cap goods stocks have performed.